Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi ta'ala wabarakatuh. Okay, in this presentation, I'm going to cover topic on planning. There are several subtopics for planning. The first subtopic that we are going to look at is on the scope of the financial statements audit. Okay, these are the subtopics or the contents of this presentation. We are going to look at the audit objective and the basic principles, and then we are going to look at the auditor's responsibilities together with the management responsibilities. And for the management assertion, transaction related audit objective and the balance related audit objective, we are going to have this on a separate slide. Okay, what is audit objective? According to the International Standards on Auditing, ISA 200, audit objective is for auditor to form and express an opinion whether the financial statements are prepared in all material respect. And it has to be in accordance with the identified reporting framework. The ISA 200 also emphasizes on the issuance of an opinion on financial statements. The Mentioned Companies Act 2016 also requires auditor to conduct the audit on the financial statements, and the opinion provided by the auditor can actually enhance the credibility of the financial statements. However, you should note that this opinion cannot be an assurance that the company is going to be viable in the future. There are steps for auditor to develop the audit objective. First, the auditor has to understand the objective for an audit, and then the auditor has to divide the client's financial statement into 4 cycles, which are the sales and accounts receivable cycle. Second, the purchase and the accounts payables cycle. Third, payroll cycle, and the last one is the inventory cycle. Then the auditor has to understand the management assertion about the accounts. The next step is the auditor has to develop sub-audit objective that relates to classes of transactions and accounts balances. Having determining the general sub-audit objectives, the auditor now has to determine the specific sub-audit objectives for classes of transaction and accounts balance. Let's look at in detail the auditor's responsibilities. Okay, according to ISA 200, which I have mentioned to you just now, the audit objective is for auditor to obtain reasonable assurance about whether the financial statements as a whole are free from material misstatement, whether due to fraud or error, thereby enabling the auditor to express an opinion on whether the financial statements are prepared in all material respect in accordance with an applicable financial reporting framework. And also, the ISA 200 require the auditor to report on the financial statements and to communicate in accordance with the auditor's finding. The ISA 700 also mentioned about the auditor's responsibility. It says that the objective of the auditor is to form an opinion on the financial statement based on an evaluation of the conclusion drawn from the audit evidence obtained. And it also requires auditor to express clearly that opinion through a written report. This is to provide a reasonable assurance that the financial statements taken as a whole are free from material misstatements. Okay, in relation to auditor has to give opinion whether financial statement has material misstatement or not. Therefore, here we can see auditor has to plan the audit in a manner that he is able to detect fraud. So he should plan the audit and perform the audit with an attitude of professional skepticism, which is to recognize circumstances that may exist that can cause financial statements to be materially misstated. Okay, what is professional skepticism? According to ISA 200, is about an attitude of mind that includes a questioning mind, being alert to conditions which may indicate possible misstatement due to error or fraud, and a critical assessment of audit evidence. Okay, the other responsibility of the auditor is in relation to fraud, where the auditor has to plan to discover material error and fraud. But remember, this is not the main objective of the auditor, because the main objective of the audit is for auditor to form an opinion about the financial statements. Okay, what is error and what is fraud? Error is unintentional misstatement. It is due to mistake in calculation or omission of transactions, or it could be due to misapplication of accounting standard, due to ignorance or due to lack of knowledge. Fraud, on the other hand, is intentional misstatement, where the person has actually intentionally commit wrongdoings in the preparation of the financial statements. Having said the auditor's responsibilities, we cannot ignore the management responsibilities. The main role of the management in relation to audit is actually to prepare a true and fair view financial statements and to present these financial statements to the user. So having the audit on the financial statement does not mean that the auditor do not have to prepare financial statement in a true and fair manner. Okay, besides this main responsibility, the management is also required to adopt sound accounting policies and also to maintain adequate internal controls. How audit objective is met by the auditor? So first of all, the auditor has to obtain audit evidence, and the audit evidence have to be sufficient and appropriate audit evidence that can support all management assertion in the financial statements. So as I said earlier, management assertion are going to be covered in a separate video. So the auditor here has to accumulate evidence, and it has to be in combination of the transaction related audit objective and balance related audit objective. Okay, for the auditor to achieve his objective, the auditor has to go through 4 phases of an audit. The first is the auditor has to plan and design the audit. Then the auditor has to perform tests. Okay, so the second and the third phase is about performing testing. Second phase is perform test of control and substantive test of transaction. And the third phase is perform analytical procedure and test of detail of balances. I will explain to you later what the tests are all about. And the last phase is for auditor to complete the audit and finally issue an audit report. Okay, the first test auditor has to carry out is test of control, where the auditor will examine the client's internal controls to determine whether they are functioning adequately or not adequately. And the result from this test will indicate whether the information recorded or stated in the financial statements are true and fair or not. Okay, the second test is audited to test the financial transactions of the client, and this is what we say substantive test of transaction. Okay, the auditor evaluate the client's recording of transaction by verifying the monetary amount of transactions. Okay, the next test is analytical procedures. This is where auditor use comparison and relationship to assess whether account balances or other data appear reasonable. For example, the auditor can calculate ratio, the auditor can perform comparison between financial data with another financial data, for example, like calculate the profit margin, or the auditor can make comparison between financial data and non-financial data. All right, the last test that the auditor is going to carry out is test of detailed balances. This is, in another terms, we say verification. So the auditor will verify all items in the statement of financial position to determine whether the figures are stated reasonably. Well, that's all about the audit objective.